Hello everyone, welcome. Today's webinar was supposed to be presented by Michalis, my colleague, regarding, and it was based on, basically he was about to present controlling emotion while you're a swing trader. Okay, unfortunately, Michalis couldn't make it today, so I'm gonna try to present on his behalf. Okay, I'm really sorry for this change. I have tried to adjust my slides in order to present you some swing trading strategies, but also focus on the emotional control, okay, how it could help you to controlling your emotions, and also, as I mentioned, we're gonna go through it through some swing trading strategies, but mainly today we're gonna stick on Michalis' topic, which was regarding controlling emotions while swing trading. So a lot about psychological control, emotional control, discipline, etc., etc., etc. I'm going to ask Michalis to repeat the particular topic so you can see his perspective, his side, his perspective as well, his thinking as well. So, so I'm just trying to present on his behalf because he was unable to make it today. So, my dear friends, this webinar has been recorded as usual. So anyone that attends today will receive the recording the session so you can have it. Okay, so welcome once again. Our deepest apologies regarding the confusion with the time. Also, as I said and explained a bit earlier, I'm presenting on behalf of Michalis because he couldn't make it. So I'm gonna try to cover today the topic that Michalis wanted to present, how to control your emotions while swing trading. Okay, so I'm gonna start with admin as usual. The disclaimer warning, anything you need, I'm here. Just stick it on the question box. This material provides general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized for a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Okay, you can find the full risk disclosure in our website. So we are good to go. Webinars@agefm.com is the email address. Feel free to contact us for anything you need, any help you might need. Okay, we are here to help. So let me just keep moving. So we're gonna, okay, obviously for some of you that attended swing trading strategies that I presented, for some of you, this strategy will be, you will see the same strategy that I use in my webinar. But today, as I said, because it's Michalis' webinar, I'm gonna focus on the emotional control. Okay, so just a second. So before we start, let me just, okay, let's start with how vital is is an appropriate emotional management for succeeding in swing trading. Nowadays, actually swing trading in general. So it's absolutely vital. So guys, are you all here? You can hear me, you can see my screen. Everything is okay? I would like to, we do. Okay, perfect. Perfect. Okay. So, you know that in general, we really support and we really repeat again and again how important, actually how vital, how essential trading psychology is, not only for swing trading, but in general, okay? Because controlling your emotions will help you actually be more productive and actually succeed. Okay, and actually succeed is a big challenge for everyone, not only newbies and not only swing traders, but is the way to eventually succeed in every business, not only in trading. I mean, be able to control your emotions and you have a clear head and focus on the facts and not what you think, right? Will help you to take decisions that are based on possibilities, on facts, on facts. So, and not just decisions taken by greediness or fear or anxiety, and etc. So emotions and emotions in trading more precisely is a big challenge, but it's vital to control your emotions because it will help you improve. Okay, so regardless what kind of trader you are, you need, it's what I say in every webinar that I do, that even you need to consider, I mean, working on firstly on improving your trading psychology first before even start learning the basics of trading. I mean, in general, psychology is important, not only in trading, but in general. I mean, be able to not to be driven by your emotions in general life is vital. So it does play a key role in trading, actually a key role in performance in trading. Okay, so it's very, very challenging, but if you stay focused, if you constantly working on improving your trading psychology, on and not on try to avoid emotional trading, will only help you, will help you to improve, will help you to could lead you basically to cognite biases, impulsive decisions, to avoid actually, sorry, impulsive decisions. So this is why it's important. Okay, so you know that making a rational decisions, okay, is obviously not something that we want, because making a rational decision means that you might take a decision that is not based on any fundamental analysis, not based on any technical analysis, and the odds of being correct, it might be just based on poor luck. So while if you're taking a decision after not an impulsive decision, but a decision based on analysis, on technical analysis, this fundamental analysis, and not based on emotions, that will only keep the possibilities on your sides, the possibilities to eventually have succeed, will be on your side. Sorry. Also, controlling emotions. You know that, yeah, it helps us make rational decisions and avoid impulsive actions. So understanding and managing your emotions is essential for making rational decisions, especially in a market that is very, very volatile, right? And we have seen volatility spiking, especially after some news, some data releases. So one of the first things to understand about psychology, especially in trading, is that our emotions are often override logical thinking. Even if at the beginning you're thinking logical and you know what to do, you know what to what you should do, what decision you should make, and etc. However, when actually you're opening your position and you can see your money either increasing in value or decreasing in value, then emotions are in the way, are getting into the way. So you might change your position or add to your position, because either you feel that you have the fear of losing your money, like paralyzing you, or because you're getting greedy. So it's not only the before opening a decision thinking, but also to have that to remain calm and logical during the time that your position is open. Because when it comes to trading, the fear of losing money can actually paralyze you, can cause you to make impulsive and irrational decisions, as we said already. On the other hand, is greediness. Greed can also cloud your judgment. and it could actually push you to, I don't know, to take your stop loss far away in order to remain in them, to hold your position open, because at some point it might turn into your favor, or it might prevent you from cutting losses, or it might lead you to take profits when needed, not to sorry, it might prevent you from taking profits when it was actually you should, but to keep it there on the belief that your profits will increase even more. So greediness, fear, all these are emotions. So to overcome these emotional biases is crucial to develop a strong mindset and control over one's emotions. So how you can achieve that? I know that it might sound funny, but before we go to the more to techniques that are directly correlated with markets, I would like to also speak about some techniques that is outside the world of trading. It's just it's outside. So I'm referring to self-reflection. I'm referring to meditation. Why not? So techniques such as mindfulness, meditation, journaling, self-reflections, these practices, or let's say, or some, there are a lot of seminars that help you generally as a human being to be able to find some practices and control, I mean, and face challenges in life. So all this helps. So these practices helps everyone, every businessman, every investor, every trader to become more self-aware. It's crucial to recognize, guys, your emotional triggers. So, for example, me, I know all these years I find out that that I actually how can I say that? I find out that, for example, short-term trades, really short-term trades, referring to a minute, let's say, or 3 minutes chart, cause me anxiety, a lot of anxiety, a lot of stress. So, you know, over like self-reflection, you get to know yourself better. Or, for example, I had to work out a lot regarding my snap mood changes, because I got panic so fast. So I managed over the years to control that with different techniques. Okay, so it's very important to recognize your emotional triggers. This will help you to stay calm, okay, and collect collect yourself during market fluctuations. Emotions that, I mean, this self-awareness, this self-reflection is not something that particularly for trading, is in general life. Okay, as human beings, you need to be aware what kind of a person you are, what's your biggest strengths, what's your biggest weaknesses, right? So another important aspect of trading psychology is having realistic expectations. Okay, so neither too pessimistic, neither too over optimistic. or so. Because a lot of new traders entered the stock market with high hopes of making, let's say, of making quick profits, but unfortunately they often meet with disappointment when they realize actually that trading requires Hey, sorry, I'm back. If the day starts awful, it seems that it continue being awful. So I'm back. Everyone here? Everyone can hear me? Backend, I can see that you're here. Can you hear me? Can you see my screen? My cursor moving? My pen moving? Yes? No? Perfect. Thank you. So, as I was saying, it's not a good day, guys. It's not a good day. The PC is not like complying. So, yes, as I was saying, what do we? Yes, we were discussing about realistic expectations, right? Another important aspect, and it's part of actually trading psychology, is having realistic expectations, because it's the number one mistake that the new traders especially are doing, having hopes, really high hopes actually, for making quick profits, but are often met with disappointment when they realize actually that trading is all about discipline, all about patience, right? It's vital to understand that. And what is even more important to understand is that that the losses are inevitable. Okay, losses are inevitable. So what you can do, and what in general the market participants are doing, is to try to limit their loss. So it's all about risk management, but we're gonna stick to that in a bit. So so you need to actually try and make yourself like to try and being friends with losses. What I'm trying to say over here is that you need to understand that is part of trading. It's inevitable. So you need to understand that you need to aim to limit your losses, overcome your losses, and at the end of the day, of the week, of the month, to try and be in profit. But even if a week is so like bad, it's okay. If you need to accept losses and move on, okay? Because having reasonable expectations can help you prevent any emotional distress, especially when things don't go as planned. So discipline. So we have seen so far that you need to understand that emotions lead to actually override logical thinking, right? You need to understand that in order that it is crucial to develop a strong mindset, a mindset that will allow you to control over any emotion. Third, having realistic expectations. And fourth, which is another key factor of succeeding, especially in swing trading this time, is discipline. It's natural for humans to want immediate gratification, okay? However, this will lead or could lead easily, guys, to hasty decision making without actually doing a proper analysis, without having a risk management strategy in place. So sticking to a predetermined plan and following a disciplined approach, a disciplined trade execution, with this way you have the odds on your side. With this way you can avoid falling prey to your emotions. Okay, so maintain discipline is crucial, and the only way to achieve this is by being well prepared, having a plan, having a strategy, having clear goals, accepting losses, having a regular self-reflection. What went wrong? What I did wrong this time? Write it down in order to correct it next time and improve your if it's something that it was due to a problem in your initial plan, adjust your plan accordingly. So that's why it's crucial to keep a record of your past trades in order to improve. Take breaks, okay? For example, today wasn't a great day, you know, wrong time schedule. It was supposed to be Mihalis' webinar. Suddenly, while I was presenting, PC switch off. So I understand that this is the very last thing that I'm doing today. I need to take a break. Same stands for with trading. If you're seeing that you have constant losses, or you're burned out, you're just too tired to focus, don't do anything. Come again in the following day, that you will be calm, you had rest, and try again. It's important to take breaks. Yeah, so let's focus on a bit on the discipline side. Okay, the discipline side. Let me. Oops, sorry. Come on. Okay, here we are. Let's stick a bit on the discipline, maintaining discipline. So, as you understood, and I already mentioned, the first step on maintain discipline is set goals. Okay. Basically, maintain discipline, guys, is the #1, let's say, rule for successfully managing your emotions when you swing trade. Okay, especially when you swing trade, because swing trading, how many of you are swing traders, by the way? How many of you are swing traders? None? So basically, swing trading is when you're taking trades with a multi-day to multi-week time frame. Okay, so any swing trader or swing trading strategy, let's say, is the strategy that seeks to capture short-term gains over a period of time, actually over a period of days or even weeks sometimes. So swing traders, regardless whether they are going long or short, okay, what they aim to do is to capture price swings towards either upside or downside, or between technical levels or support levels, that actually they could keep their trade open even for a few days or even weeks. Okay, it's the style of trading that captures short-term to medium-term gains. So they are basically primarily use technical analysis. Okay, but they do utilize fundamental analysis as well. But mainly this is what the swing trading is. It's the approach when you're taking trades that last a couple of days or even weeks, okay? But based on short-term capture. So you are exposed into overnight risk, into weekend risk. So yeah, this is what the swing trading is when it involves even you're capturing the trade in short term, but you're holding the position open for more than one session, but no more than few weeks. Okay, so it's not like it's gonna you're gonna move into long term. It's short to medium term. So yeah, so as I was saying, let's get back to the emotional control. Yeah, the very first step for maintaining discipline is to set goals. But an even more important thing is to stick on them. Stick on them. Don't get greedy. Stick on your goals and be happy with what you have predetermined. Be happy with the goals that you have set, and don't change it during the trade. So specific profit taking, specific stop loss level before taking the trade, and don't change it for any reason. It's important to avoid temptation, okay? Very important. Why is important? So by sticking to these predetermined targets, okay, it's basically is a mechanism, is a technique to prevent yourself from making any emotional decisions that might lead to costly mistakes, right? So be happy with your goals, be happy with the fact that you kick your profit target, be happy with that profit, and don't think but oh, I did a mistake, I should keep it for longer, and I should, with this way I would have earn more. No, profit's a profit, no matter how big or small it is. Okay, in addition, essential for swing traders is to have a well-defined trading strategy, right? Have your individual risk tolerance and investment goals, right? So have a system. Let me get back to my slides, the ones that I had. Be systematic, have a system, trade your system, accept your losses, back your winners, and repeat. Have your system, trade your system, accept your losses, back your wins, and repeat. Essential. It should be your 5 steps to success. Having a system, having a well-defined trading strategy obviously requires technical analysis, requires fundamental analysis, either the one or the other or both, okay? A clear, defined approach that will help you stay focused, stay disciplined, right? And it will help you actually improve yourself rather than making impulsive decisions. Another important aspect of maintaining discipline is proper risk management, right? the goal, setting your goals in advance, setting your stop loss in advance, this is part of risk management. But in order to have a more strategic approach of risk management, you need to attend a proper risk management techniques. We have presented plenty in the past. There are plenty out there. Or you can create your own, right? It's just you need to include practices that will help you limit the amount invested in a single trade and not over leverage your account. With this way, you will limit the chances of potential losses and avoid again any emotional decision. Again, I'm repeating myself, I know. Accepting losses. Not saying that you should accept losses every day. That means that something wrong with your strategy, something wrong with your approach, your I don't know, you might have been over optimistic and you have you have set unrealistic goals. But accepting losses from time to time is it's something that is you should understand. The key is discipline again, not to let these setbacks impact your future trades, your future decisions, and in general your confidence. Keeping your emotions in check, especially during losing strikes, it can be really challenging, okay? But if you stay focused, if you stay disciplined, will allow you a more objective thinking. And as we said, self-reflection, go back, write down if you had a bad trade, write it down, try to check whether it's something that you did wrong or it was just, let's say, was just based on some sudden news, breaking news, or but monitor it. I mean, double check what went wrong. Was it something that my strategy needs adjustment? Have I done a mistake? What mistake have I done? In order not to repeat it, write down in your journal this kind of past trades just for improvement. And last but not least, again, the importance of taking breaks. Try to help any burnout. Let's move on. So, what makes a good swing trader? A good swing trader is, as we already mentioned, is having a system. Let me just bring back that very important tiny slide. Having a system, trading his system, accepting his losses, back your wins, and repeat. Right? This is the heart of a good swing trader. That, which a part of it is, as we said earlier, a technical analysis, a fundamental analysis, or a combination of both. So, understanding and identifying trends, right? So, which is part of technical analysis, obviously will help you avoid trying to fight or go against the trend. Trend is your friend, as we keep saying. Technical analysis can help you differentiate a retrace from a reversal, which is something quite challenging as well. Another important thing that could make a swing trader a good swing trader, be able to read properly patterns and formations. And not only read them, actually making sure that they are confirmed ones, because we might see head and shoulder, but we might not see the breakout of the neckline of head and shoulder. So being able to see a pattern and read it properly is different than just be aware that there is a head and shoulder pattern over there. No, you need to read it properly. You need to read it properly in order to understand when you have a confirmed break of the neckline, for example, which indicates to a signal, either a bullish or a bearish, depending whether you have an inverted head and shoulders or not inverted head and shoulders. Oops. So, come on. Sorry, just so if you want to try swing trading, you need to understand, guys, that is a strategy that requires a really high level of trading psychology. You need to understand that trend is your friend. So if you want to try yourself as a swing trader, don't fight trend. Be friends with the trend. Go along with the trend. Swing trading is typically in a daily time frame and 4-hour charts as well. Okay. Or even 1 hour, so just to spot the entry or exit, but no shorter than that. And in my last for a few days or a few weeks. So these are the typical time frames. Okay, 1 hour, 4 hour, or even daily for placing your entry or exit, for spotting your entry and exit. And you might hold it for a day or even weeks, no more than a month. Okay, it's very rare to hold it for a month actually. Let's get back up. Also, you need to have a backtest system. So backtest system, what it is, I mean, having a journal to write down your past trades, to see what it works, what it doesn't work, in which time frame that winning trade was profitable, what you did wrong with. So this not only self-reflection, but also to this review of your system all the time is crucial in order to improve it, right? Sorry. Write down a journal, write down your past trades, your strategy, your predetermined goals. Basically, backtesting is the way of analyzing the potential performance as well, but also the past performance as well. What else regarding backtesting? Also, backtesting is analyzing historical data with that particular system that you have created in order to see what's the possibilities of giving you accurate and nice outcomes, the best outcomes actually. Okay, so based on the past data, let's say you might check euro dollar and you go backwards and test your strategy on euro dollar to see how many times it gave you good results. So by trying this, you're gonna find ways to improve your strategy as well. It's not a guarantee that, okay, but it will improve your strategy, your system, and your future performance as well. So yeah. Actually, in how you compact test, I know that this is not relevant to today's webinar, but have in mind that MT4 and I think MT5 as well has a backtesting tool. Okay, it has a backtesting tool called Strategy Tester. So basically, you can test. Okay, if you want to try an expert advisor or any automated trading program, you can use the strategy tester tool to check whether that system is a good one or not. So so you can, if you're using an expert advisor or a EA, etc., you can use MT4 or MT5 trading strategy testers, sorry, to review with the quantitative data this expert advisor. So there is a lot of information you can use to test your trading strategy, okay, right? Including profit loss, percentage ratio, the amount of profitable and loss-making trades in a given period, the risk factors involved, and many, many more, okay? So obviously, by analyzing these results will help you to detect possible flows of your trading strategy and enables you to customize the expert advisor's parameter in order to get the best outcome for you. So yeah, have a look on that strategy testers in MT4 and MT5. Now let's move on. Back testing, yes, also making a good swing trader. Understanding the simple indicators, trend lines, Fibonacci levels, oscillators, patterns, candlestick patterns, candlestick formations as well. Accepting losses, that's under the umbrella of trading psychology. And one thing that is vital, which is part of trading strategy, as trading psychology, is to understand yourself. A very challenging but necessary step for an appropriate risk management. So guys, I'm gonna call it a date. That was today's session on behalf of Michalis. It was regarding controlling emotions for swing traders. It wasn't for presenting swing strategies, but I have already presented some in my previous webinars. So feel free to navigate in our past webinar page and see past swing strategies. Let me check if I can find the link for you. Past webinars HFM. Here we are, send to all, or check our YouTube channel and you can find them over there as well. Any questions before I call it a date? I'm not gonna go through these slides because these are just swing strategies, more advanced, less beginners ones and a bit more intermediate ones. So, but today's session was about controlling emotions in swing trading. So there are no while using automated systems of copy trading helping controlling emotions. Okay, obviously copy trading Actually, yes, it does. Because, my dear friend, even in copy trading, even in automated systems, you can close your position if you want to, even if your strategy provider doesn't, or you might change your risk and reward ratio. So be tempted by the success and say, oh, I'm gonna change some parameters in order to gain more, right? Am I right, Bob? Am I right? Yes, I know that I'm right. You're doing that. Are you tempted to change? As if you're following, especially a copy trader, you're tempted to change, right? The risk and reward, or maybe shift. Uh, so yeah, guys, you need to understand something. It's not only about trading. Be able to work on yourself to improve that as a human being, to be a better person. It will help you in every aspect of your life. It might be the only thing that I can guarantee, right? Everything. With your relationship with other people, with your relationship with your colleagues, with your relationship with your family, it will help you to be a better person, a better person. Okay, so finding your biggest weaknesses and your biggest strengths, be able to control your emotion will only improve you as a human being. But the bonus will be to help you improve as trader as well, and as an investor as well. So yeah, so what I there are some famous, I think it was from an actor. Let me find it. I don't remember who was it, but there was a very famous quote saying that self-control is strength, calmness is mastery. You have to get to a point where your mood doesn't shift based on the insignificant actions of someone else. Don't allow others to control the direction of your life. Don't allow your emotions to overpower your intelligence. Right? So it's just you're doing yourself a favor. You're helping yourself to deal with any difficult situation that life might brings you. Okay? It would only help you, not the vice versa, in every aspect in your life. So food for thought, okay? Food for thought. So thank you very much. Have a great day ahead. Take care. And yeah, stay positive and stay calm and stay disciplined. Thank you very much, guys. I'm really sorry for this mess today, for the inconvenience with the time, with the sudden the fact that PC just went blank, just switch off. Sorry for I know that you were registered for controlling your emotion in swing trading from Michalis. Unfortunately, Michalis couldn't make it, so I tried to do my best and present something on his behalf. Hopefully you find this session at least a bit helpful, and once Michalis is available, I'm gonna ask him to provide another session for controlling emotions in swing trading. You might see his perspective as well. Thank you very much. Have a great day ahead. Take care. I'd like to warn you that the next 2 weeks will be very, very volatile. Okay, we have actually a lot of earnings coming out the next 2 weeks. We're just 2 weeks ahead of the US elections. We keep having record highs in gold. Stocks are also nearly record highs as well. We have a lot of anticipation of the Fed easing. So there are plenty of things and data expected. We have NFP next week as well. So the next 2 weeks are expected to be gigantic. So volatility might only increase ahead of NFP, ahead of the Fed, ahead of the US elections. So stay well informed. Okay. Thank you very much. Have a great day ahead. Bye bye.